One farmer says, "Seems to me there was a tea party in Boston that was illegal too."
I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold.
We shall seek to establish and maintain a dollar which will not change its purchasing and debt-paying power during the succeeding generation.
As anguished shrieks rose up from the floor of the New York Stock Exchange.
Government credit and government currency are really one and the same thing. A reserve of gold and a small reserve of silver.
So why do central banks hold it?
Well, it's a form of reserves.
Why don't they hold diamonds?
Well, it's tradition, long-term tradition.
Welcome back to the Junius Maltby channel, the most boring channel on YouTube. We have a tremendous amount of material to go over today, all of it tying in with a similar theme, and you are familiar with it if you've been part of this channel for quite some time. But the first article that's going to be the tipping point towards the other discussions is Overstock's controversial former CEO sold his entire $90 million stake in the company to pile into gold and crypto investments. Overstock founder and former CEO Patrick Byrne sold nearly 5 million shares, totaling roughly $90 million, in order to invest in gold and cryptocurrencies, according to regulatory filings and a Wednesday blog post. I wonder if he's been tuning into the Junius Maltby channel. The former executive said his sale was to separate the company from his own controversial statements, and that regulatory agencies would, quote, try to break Overstock as a way of crippling me, unquote. Byrne resigned from the position August 22nd after an unusual statement addressing the, quote, deep state, unquote, tanked the company's stock. Ooh, see what happens when you go after the deep state? They tank your stock. They wreck you. Or they just suicide you. It depends what they decide to do. The press release also drew attention to his 3-year relationship with Russian spy Maria Butina, although it wasn't specifically mentioned. Or they try to slander you and defame your character and throw curveballs at the media about nefarious activities or anything they can conjure up to blemish you and discredit you. If you question these people, they will destroy you or they will suicide you. So pay attention to the news going into the future. If mysteriously Patrick ends up doing something harmful to himself, we all know what actually took place. You know, if he ends up pouring concrete into a couple of 5-gallon buckets, putting his feet in them, letting it harden, and then throwing himself into, let's say, a lake someplace, and he leaves a little note behind, it might not have been him. Okay, it might be some questionable activity surrounding that. Let's read further here. Overstock founder and former CEO Patrick Byrne sold nearly 5 million shares, totaling roughly $90 million, in order to invest in counter-cyclical assets like gold and cryptocurrencies. Byrne plans to make his new investments by Friday. He can also provide a, quote, capital injection if needed by buying back into Overstock, unquote, as soon as March 17, 2020, a Wednesday blog post highlighted. The former executive added that his move into crypto and precious metals allows him to move his capital outside acts of retaliation from the deep state. Perfect. That's poetry. That is beautiful, the way he painted that. That is exactly the reason why crypto and gold are accelerating in this age. People are sick of it. We're sick of currency manipulations, trade wars, currency wars, inflation taxes, all of the things the deep state tries to do to rob the individual of the fruits of their labor. This is beautiful to see this in headlines, to raise this flag and this banner for others to see. It really puts a spotlight on the ownership of gold, and it might perk up questions in other billionaires' minds that might not know or understand. Who knows what circles he's in, what dinner parties he's at, where he espouses these beliefs, who else he'll convince. Although we've been there, I mean, it looks like we're a little bit early to the party. We got there before the cocktails. If you're part of the Junius Maltby channel, you've been purchasing gold for over a decade or longer, much longer. And for the same reasons that this individual is stating here and now. That is important because, in fact, I am now going to shellac them, he wrote. Actually, shellac is too weak a word for what I intend to do to the deep state. Sit back and enjoy the show. I think we need to make some popcorn and sit back and watch this. I'm curious what is about to unfold and what he is going to divulge as far as information. The company's founder cited insurance, controversy, and hedging for the reasons behind his sale, and that it wasn't due to a lack of confidence in the e-commerce business. Finding corporate insurance while leading Overstock was impossible, the former CEO said, and the company's success in 2019 made for a good time to sell. Byrne added that his controversial statements would negatively affect the company, as he expects regulatory bodies to try to break Overstock as a way of crippling me. The firm can avoid any Byrne-related hot water now that his stake is eliminated, he said. You think me controversial now, but you ain't seen nothing yet. I know enough to fry the deep state to ashes, Byrne wrote. I am at the edge of my seat, literally, the edge of my seat, curious with what he is about to divulge. I hope he's taking precautions and being very safe. If I were him, I would not let anyone know my whereabouts, and I would not have a cell phone on me at all at this time, because these people have ways of making people hurt themselves. The company's stock fell as much as 8.9% early Thursday before paring some losses. Overstock traded at $15.56 per share as of 11:21 a.m. Eastern Time and is up about 9% year to date. Byrne exited the company August 22nd, calling himself, quote, already too controversial to serve as CEO, unquote. The former executive issued a press release August 12th saying he assisted in federal elections into the 2016 U.S. presidential election. He regarded the statement as, quote, comments on the deep state, unquote, referred to law enforcement officials as, quote, the men in black, unquote, and said his decision to issue the release was encouraged by his Omaha rabbi. The August 12th press release also drew attention to his 3-year relationship with Russian spy Maria Butina. Though it wasn't specifically mentioned, Byrne's statements was made to publicize his issues with how the federal government handled its case against Butina, the New York Times reported. Byrne's resignation saw shares trade up to 17% higher August 22nd. This situation made headlines across the internet. Overstock's controversial former CEO selling $90 million of his shares to purchase gold and crypto assets. I'm sure this sent shockwaves through the circles of people at that level. I'll tell you right now, this is something to look at because it's not, I would say his primary motivation should not be and cannot be entirely based on information he's about to release and his care or worry over Overstock's future stock prices. I think deep down, and maybe we'll hear about it later on, he must see some of what is taking place in the global economy, and he's trying to preserve his wealth going forward. We're going to look at a couple articles here momentarily that further point to what is coming. They serve as indicators on our compass. There are events unfolding that point to future rises in metal prices and certain situations, I guess you could call them, that will affect the economy negatively. So just stand by for that, but just keep in mind when we go forward in today's video this individual's actions in preparation for what is likely to unfold in the future. I believe that was a driving motivation for him to do what he just did. Quickly checking in on metals prices. Right now we're seeing silver at $17.91, gold at $15.09, And then we got platinum 941, palladium 1611. Gold gained support from weak dollar post-Fed, and palladium set a record. I can't believe palladium's blowing my mind. I mean, unbelievable. I remember when palladium was $200 an ounce. I remember when someone very close to me sold a lot of their palladium back when it was around 300. But to see it at 1611.70, unheard of, absolutely incredible. Now, is it speculation? What's driving it? A lot of questions there. I don't hold any palladium at all whatsoever, and I'm a big fan, as you know, of gold. I'm curious how palladium will fare with an industrial slowdown going forward and economic uncertainty, fluctuations in the stock market, vehicle production dwindling, catalytic converter production dwindling. A lot of questions I have for the staying power of these values for palladium. I'm not saying it's a horrible, thing to be purchasing palladium. I'm just saying I'm not comfortable at these levels purchasing palladium. I don't know its staying power as far as a hedge. Just it's something about it is unnerving, especially at these levels and the rate at which it took them. Repurchase agreements. So before we get into this article, let's look up what repurchase agreements are and refamiliarize ourselves with their role in the economy. So a repurchase agreement, it's a money market instrument selling collaterals with the promise to buy them back at a later point. A repurchase agreement, also known as a repo, is a form of short-term borrowing, mainly in government securities. The dealer sells the underlying security to investors and buys them back shortly afterwards, usually the following day, at a slightly higher price. Now, nobody knows what's going on, but the repo market freezes as an overnight rate hits an all-time high of 10%. This is from our covert Black Ops friend Tyler Durden. Back in the summer of 2013, China's banking system was on the verge of collapse when its overnight repo rates briefly soared to the mid-20% range, prompting the central bank to take emergency intervention to avoid a funding freeze. As of this morning, the U.S. is halfway there. After we reported yesterday that something snapped as chaos hit the report market, and the overnight repo rate exploded as high as 7% for a variety of reasons, including elevated UST supply, bloated dealer balance sheets, and year-end regulatory constraints, a banking system near reserve scarcity, investors selling bonds back to dealers, and banks and money market funds to make their quarterly tax payment. On Tuesday, this panicked funding shortage has intensified to never-before-seen levels as overnight repo has now hit 10% and shows no signs of slowing. Now here is a look at a chart featured in the article. This is the U.S. overnight repo rate. Dating back to 2014, you can see it hovering there just around 0.5%. And then all of a sudden it ticks along there. It's rising slowly. It gets around to 1.5% in about the first quarter of 2018. And then all of a sudden, after a little bit slower rise up to around 2 and 2.5%, we see it spike dramatically just recently to 10%. Skyrocket, hockey stick chart of a 10% in the overnight repo rate. While specific prints are scarce, as the bid-ask spread is a massive 2% at last check, Reuters has GC repo at 10%, while Bloomberg's own pricing sources show the key funding rate soaring by more than 600 basis points to 8.53%, based on the ICAP pricing, after opening around 7%. Putting this move in context, overnight GC repo has not only just had its biggest surge in history, but it is printing at the highest level in decades. Not even the rates experts are stumped, with one stirred trader saying nobody knows what is going on, and desks are simply watching what appears to be a relentless dollar funding squeeze as one or more entities are in desperate need for funding and will pay any price for it even though it is neither month nor quarter end yet. As a reminder, commenting on Monday's just as shocking move, BMO rates strategist John Hill said that secured funding markets are clearly not functioning well, adding that a jump like this, one which is not happening during the traditional quarter-end window dressing period, is, quote, bordering on chaos, unquote. It is thus safe to say that secured funding markets are now officially broken. Separately, Bloomberg points out that the LIBOR replacement rate, LIBOR being the banks lending each other money, the SOFR, or secured overnight financing rate, which is backed by overnight GC repo transactions, also jumped to 2.43% Monday from 2.2%. New York Fed data show. That's the highest since July 31st. And it is odd because it is taking place as the Fed already cut rates once and is expected to cut rates again tomorrow. We already know that they did, by at least 25 basis points. Meanwhile, as we warned last Friday, the funding shortage has now spilled over into money markets, making dollar funding much more expensive as any U.S. dollar-based cross-currency swap spike. As Bloomberg notes, demand for the dollar is showing up in swap rates from euros, pounds, yen, and even Australia's currency. As an example, the cost to borrow dollars for 1 week in Forex markets while lending euros almost doubled. Something's not right. Something is unhealthy. Something is sick. And it's the world economy. Here's a chart showing changes in cross-currency swaps since September of 13 in basis points. Just like Monday, while there was no immediate catalyst, as we explained on Friday, the reason behind Monday's GC repo explosion is a combination of factors, including the settlement of the mid-month Treasury coupon auctions that pushed collateral into the repo market, even as cash is leaving the funding space as corporations have withdrawn cash parked with banks and money market funds to make their quarterly tax payment. But the biggest reason for the sudden dollar shortage is that, as discussed extensively following the recent debt ceiling deal, the Treasury is aggressively pushing its cash balance higher while depleting the amount of bank reserves in the system. Here is a chart. U.S. Treasury actions will likely tighten U.S. dollar liquidity in coming months. Skipping to the last paragraph, the problem for the Fed is that following today's massive move in repo higher, it now appears that the Fed is once again behind the curve. And this time, the funding squeeze could have dire consequences for not only the economy, but the market, as the broken repo plumbing means that despite $1.4 trillion in excess reserves, one or more banks are suddenly left without liquidity, which, as we explained over a month ago, in the, quote, forget China, the Fed has a much bigger problem on its hands, end quote, the only alternative Powell may soon have is to restart QE. And we all know what QE, quantitative easing, means and what it will do to the commodities markets, especially the value of precious metals. Some further information from this article by Max Slavo. A huge crack just appeared in the financial markets overnight. A large crack has appeared in the financial markets overnight in a segment of the market that the public rarely, if ever, notices. This crack, however, is crucial to the functioning of the global financial system. Borrowing rates skyrocketed on Tuesday, forcing the New York Federal Reserve to come to the rescue with a special operation aimed at easing stress in financial markets. According to CNN, this was the New York Fed's first such rescue operation in a decade, the last occurring in late 2008. That should raise serious red flags, my friends. It's unprecedented, at least in the post-crisis era, said Mark Cabana, rates strategist at Bank of America Merrill Lynch. On Tuesday morning, the New York Fed launched what's called an overnight repo operation, during which the central bank attempts to ease pressure in markets by purchasing treasuries and other securities. The goal is to pump money into the system to keep borrowing costs from creeping above the Fed's target range. The first attempt by the New York Fed to ease some pressure on the markets was canceled because of, quote, technical difficulties, unquote. Just a few minutes later, the New York Fed successfully injected $53 billion into the system. The episode demonstrates evidence of emerging strains in financial markets and raises concern that the Federal Reserve could be losing its grip on short-term rates. The funding markets are clearly stressed, said Guy Labas, managing director of fixed income strategy at Janney Capital Markets. It's going to require Fed action. That's in quotations. What is strange is that it isn't really clear what caused the strain in the markets this time. It did happen overnight, but no one knows how long it will last either. No one knows why this is happening, Jim Bianco, CEO of Bianco Research, said on Twitter. If it persists more than another day or two, it will be a problem. Again, in quotations. Mortgage rates shoot up following bond market sell-off. Mortgage applications were flat as a bump in purchases was offset by a drop in refinances. We talked about this recently. Big drop in people trying to refinance their homes. Mortgage rates declined ahead of the Fed meeting. The average rate for a 30-year fixed-rate mortgage for a typical borrower did come down. And it sounds like some people, it perked up. There was a little bit of interest in people refinancing when that did occur. However, weekly mortgage refinances fall further despite lower interest rates. Again, another article off of CNBC. This was 2 weeks ago. Now we're seeing problems in the mortgage markets. Again, this was one of those things that started to take place back in the 2008 crisis. You know, as we all know, the mortgage-backed securities really were what a lot of people blamed for that economic crisis. However, they were just one piece of a much bigger puzzle. But we're starting to see this whole scene, all of it. Lots of symptoms starting to pop up in this patient. A lot of symptoms. Fed loses control of its own interest rate as it cuts rates. This just doesn't look good. It's been a turbulent week in the overnight funding markets where short-term rates spiked to levels as high as 10% Monday and Tuesday before the Fed calmed it down. We just talked about that. The Fed was forced to do 2 open market operations to tame the rate move, but its own Fed funds target rate in an unusual move rose to 2.3% above the Fed funds target rate range it set on July 31st. Market pros said the problem came from a cash crunch, not a credit crisis, but the Fed will have to find a permanent fix for it before it impacts the financial system. Fed Chairman Jerome Powell said he expects the market to steady and said the Fed is ready to intervene as needed. Boy, does that language sound familiar. If you recall, back in the 07-08 time period, we heard similar statements come from the then Fed Chairman. These people try to always calm everyone down. It's like somebody standing on the deck of the Titanic telling everyone not to panic, everything's going to be okay, you know, we're fixing the hole, and we're gonna seal the leak, nothing's happening, everyone just go back to their rooms, back to their quarters, please, and if you can, drink some champagne and listen to some music, everything's going to be okay, just calm down, you know, don't buy any gold, don't panic, you know, leave your 401k and your pension and your Roth and all of your stocks, bonds, and mutual funds where they are, don't touch them, don't sell anything. Don't move your assets. You know, you don't want to be scared. Just hold tight. Yeah, we've heard this before. We've all heard this before. I'm looking forward to this channel existing during the coming times, as it was not in existence and production during the 08 crisis. However, I did carry on many of these conversations with myself or with others or anyone who would listen or friends and family. And that was really the impetus behind founding this channel. It became a place where when I ran out of friends or others to talk to about this topic and the things we cover here, I was able to then put them here on the Junius Maltby channel. And, well, here we are now. I never intended for it to become what it was. Never thought we would mint a coin or that the community would grow and that the conversation would take place with such a large, diverse group of people spread around the globe. So many friends, so many of you out there in every corner of the world. as I sit here with a cat purring on my lap. You might be able to hear her, actually. My little anti-government kitty purring and sitting here as we make videos and produce the news and spread the word, right, kitty? Oh, she's so very content to sit on the lap. All right, sometimes she runs on the keyboard and causes problems. But speaking of the coin, the Junius Maltby round, it's over. The 15th was the last day to order them. If you've been part of the channel, you've probably seen the videos on that. I know Sal covered it over at the Salivate Metals channel, and it's gone. The dies will be shipped to me. The last coins have been struck. You should be receiving yours if you ordered them. They have been or are in the process of being minted, and that is it. The final mintage number, I will get that from Quality Silver Bullion. I believe it's under 1,000, unless some of you really stepped up and ordered a lot of them. I believe we're going to probably see it around 800 to 900 pieces, in that range. So that's it. The silver Junius Maltby round has ceased mintage, ceased production, with an overall mint population of, I'm guessing at this point, without the hard and fast numbers from the mint, around 800 or so coins out there. If you all have one, you know what, go ahead and, I don't usually do this, but make a video on it. You know, just, I don't know, tell me what it means to you to have that coin. Try to share the message that's on it, the imagery of Marcius, the Imagi symbol, and what we put into that coin here on this channel. All of you contributing to not only the making of the dies, but ordering the coin when it came out. The input from all of you into the final design. You know, we made video after video trying to get input on how the coin would appear, and it was a success. It was a community success. It really was. Not very many channels have put out coins struck like that. You know, Sal, as far as I know, was one of the leaders in that, one of the first to do so, and his coins have, you know, made a huge splash on the scene, and everyone enjoys his Vertitude rounds, his Salivate Metal round. He's got 2 of them out, so go check those out if you get a chance. But it's a special thing. It really is. And those coins will exist longer than us. They'll be passed down. The messages that are struck onto them will be passed on. And hopefully it leads to a further understanding and exploration of the principles founded here and on channels like this, carrying on the discussions of sound money and being anti-deep state, anti-state, pro-free market. You know, it really is. It's impressive to see what's taking place, to see the news, to be here now, and to read things like this article about the Overstock guy. You know, to see an article all over the newspapers of a guy selling $90 million in stock to buy gold. It's impressive. And it should encourage each and every one of you who have made similar decisions. Maybe not with $90 million, but perhaps you've taken $90 or $900 and you've allocated that towards precious metals. If so, strong work. Carry on. Keep doing so. Thanks for participating, being part of this channel. If you sat through 28 minutes and 36 seconds of this video, I commend you for actually bearing with my boring voice, this boring content, and being here. Don't forget to like the video. That's the thumb up button. Share it. Post it on your book face if you've got that, or any social media. Tweet it out there. Send it to friends and family. And if you're not a subscriber yet, you haven't followed the channel, do so, and hit the button down there that gives you alerts and notifications so that you can be notified when new videos come out. If we do a live, you'll be part of that as well. And if we do premieres, when the videos come out, you'll see those quickly as well. All right. Thanks for being here. Thanks for participating. Have a good night.